First of all, let's talk about the assumptions. I think that's something that no surprise is there, because we've seen the medium-term fiscal strategy of the government being well articulated before now. But $70 per barrel oil price, 155 naira to the dollar exchange rate assumption, and everything else there, I think, is neither here nor there in terms of the GDP or inflation. But those are the two key points for me. What are your thoughts on those?
Well, yeah, those were the figures we expected. I still have my doubts on the exchange rate assumption in terms of sustainability. It becomes more sustainable, however, given it is more probable that it will be sustainable given the level of fiscal consolidation built into the budget, reducing spending, trying to cut down on the current expenditure. So, yeah, by and large, no surprises on the assumptions.
And then there's always the issue of implementation with Nigeria's budget. I just read a report by the Minister of, a note from the Minister of State for Finance saying that only 57% of the budget was implemented as at October for this year, obviously. And it's obviously in our history. How critical is it going into next year with all that is happening in the world for us to get more implementation this time around?
Well, to be a little bit fair to the government, let's concede that 2011 was involved a very difficult transition from the late president to President Goodluck. An election, a lot of turmoil around replacing cabinets and then security challenges. So perhaps we have ground to hope that having a full 12 months of a cabinet in place, a government in place, a strong economic team in place, probably we should expect a higher level of implementation in 2012.
Let's talk about some of the priority areas. Defense and security is taking about 931 billion naira. Power and infrastructure, power and works, taking another 340 billion thereabouts. Education, and then health and agri. Those seems to be the sectors taking most of the money. What are your thoughts on that?
And it's consistent with the thinking we had the president articulate behind the budget. Fiscal consolidation, critical infrastructure, employment creation, a lot of emphasis on agriculture and all of that. So, yes, some will wonder at the gap of the security-related spending, but perhaps given the challenges we've had with Boko Haram, with crime, with kidnapping,
that is a strong statement
violence,
for you.
yes, it speaks to the fact that government wants to focus on security. But I'm happy that education and health, and then critical infrastructure and power take strong place in the budget, and that's also consistent with the president's emphasis on human capital development, focusing on people. It's not just about the budget for the sake of it; it's about people, and that reflects somewhat in the assumptions behind the budget.
Obviously, we're going to get more information from the Minister of Finance when she makes her presentation next year. But for me, another area that is very interesting is on the issue of tariffs. We're seeing, with the government's focus on agric, increase in tariffs in certain commodities. Imported wheat, we're hearing, is going up significantly. Brown rice, polished rice, these are obviously commodities that we import a lot in Nigeria. And the thinking behind that, like was alluded to in the presentation, was to reduce the pressure.
There's a lot of talk about structural reforms, and it goes beyond tariffs, privatization, underpower, public service reforms, all of that. But there seems to be a deliberate strategy to liberalize the economy. I mean, to liberalize the sources of the means of our spending, such that the dependence on oil will be reduced. And agriculture seems to be a target. The question which government has to work on in conjunction with the private sector is how fast we can build up that capacity in agriculture, so that those tariffs do not end up hurting the people.
That's the big question, because if you increase those tariffs, obviously the prices of those goods would increase, inflationary impact of that, and makes life more difficult. And
as a strategic objective,
at this point, it doesn't sound like we are there yet in terms of the agric
Yes, as a strategic objective, nobody will object to trying to discourage export consumption, imported consumption, which is what we've been doing, of everything. But we have to carefully calibrate the process and the order such that tariffs do not end up hurting the poor.